outlook for the two economies is a little bit divergent, Carl. I mean, the U.S. economy still has considerable near-term momentum, but I think there's a compelling case to make that it's going to fade as the fiscal stimulus wanes, interest rate risks mount. China, on the other hand, does have a dicier near-term economic outlook as the GDP and monthly data flow for September indicates, but the longer-term outlook is actually more compelling. They have more policy space to utilize. They're utilizing it right now, so there is a divergence here.
In terms of that longer-term outlook, Stephen, can we dig into that a little bit more? I mean, I know they've just announced these plans to reform and cut personal income taxes. There have been other moves to stoke stimulus more broadly in the economy. Is that what you're referring to?
Well, I think those are cyclical responses, Morgan, and I think they will put a floor on the near-term risks of the Chinese economy, which could have further to go on the downside. But the longer-term structural reforms, the rebalancing to a consumer and services-led economy, dealing with some of these productivity issues through their supply-side initiatives, the controversial shift to indigenous innovation, that's what really frames the longer-term outlook for China. And I think, with the notable exception of the conflict over innovation because of this trade war, I think that the prospects on all of those counts are still pretty constructive for China.
Do you think we get to a deal in terms of trade and some of these IP issues, et cetera, with China?
I think we can, after the midterms, talk about the possibility of a sort of a short-term fix, possibly on the trade front, but the longer-term issues on innovation, industrial policy, I think it's going to be much harder to come both from the U.S. side and the Chinese side.
In terms of how to think about U.S. businesses doing business in China, I mean, we certainly have had a steady stream of industrial earnings today. China's come up on a number of those calls, be it United Technologies, 3M, Caterpillar. It seems like they're feeling the impact of tariff, but that their business in China per se isn't necessarily being affected. Do you think that's the best way to sort of categorize this right now, or is there this broader softness that's beginning to affect corporate America?
Well, look, I think the structural changes in China are favoring the domestic demand impetus to China. So the companies that can lever their business to China's growing consumer markets certainly have some resilience built into their earnings potential. The export pressures that will eventually come from the tariffs that really have yet to be felt in the Chinese export trends, which actually remained quite strong through September. But obviously, that sector is going to get hit if these tariffs remain in place.